With the economic turmoil this year, is cash the best place to be in 2023? That's what we're getting into today. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian. And in today's video, we're discussing whether or not money market funds are the best place to be in 2023. Specifically, we're going to dive deep and cover the benefits and risks involved so that you can make the best decision for your financial future.
Yeah, exactly. Everyone's financial situation is different, and we're not about to make definitive claims about where you should be keeping your money. So,
yeah, absolutely. That's not what we do here. So, Brian, as more and more investors are looking for a safe place to park their cash and earn higher yields, money market funds are rising in popularity. Take us through why this is.
Yeah, these funds are a type of mutual fund that invest in short-term liquid instruments like cash, certificates of deposits, and even US Treasury bills. They could be a basket of any one of these items, and it changes all the time. So,
right.
One of the main appeals of money market funds is their high yields compared to traditional savings accounts. Remember how low the traditional savings accounts have been in the last few years, right?
Yes.
And so the largest retail money market fund, the Fidelity Government Money Market Fund, which is SPAXX, had a 4.48% yield as of April 17th, compared to a 0.01% national average on interest checking accounts and 0.24% on savings accounts. So, that was according to the April 12th bankrate.com survey.
Okay.
Now, high yield savings accounts have lower rates than money market, coming in at about an average around 4%. And I got to tell you, just a couple of weeks ago, it was actually opposite, where the high yield was actually a little higher than money market. So things move pretty fast. And that's why most of this, Michelle, you'll see it on it's quoted on a 7-day basis. They show what the yield is every 7 days.
So real quick, if someone wants to know what as you said, it's SPAXX, and that's what they go look up to find out what the yield is?
Yeah, you can go to Yahoo Finance or Bloomberg or anything like that and type in, or just type it in Google. So,
okay. So you said 4.48% yield as of April 17th.
Yes.
Jeez, man. Especially compared to that, 0.01 national average on checking accounts.
Yeah, I look at my checking account and I have to keep X amount of dollars in there, for utilities and stuff like that. But it just drives me nuts knowing that I got to leave it there. So,
okay. So Brian, let's move on to what's another reason they're attractive.
Another reason mutual funds are attractive is because they pass on changes in interest rates faster than banks. This means that when the Federal Reserve either raises or lowers its benchmark interest rate, money market funds move real quick, adjust their yields to reflect the new rate, where banks take a little longer to do so.
Got it.
However, they're not insured by the FDIC, so there's a risk of losing money. So keep watching, because we'll discuss these risks here in a moment.
All right. So real quick, how liquid are money market accounts? Meaning, can I pull my money in an instant if I want to take advantage of an investing opportunity or for whatever reason? And the second question is, are there fees associated with withdrawing?
Yeah, they're 100% liquid. You can buy and sell these things instantly. Okay. Investors basically leave liquid funds in this type of account and then purchase stocks, bonds, or whatever they can at will. So,
okay. And what about fees?
As far as the fees wise, they're not being charged fees for that. The account just sits there. So it's just a liquid account. So,
okay, got it.
At least the majority, I should say.
Majority, right. Okay. Each account
majority of accounts, money market accounts, are free. So,
okay. All right. So let's talk about the different types of money market funds. Walk us through those.
Okay. There's three main types of money market funds. You got the government ones, the prime ones, and treasury.
Okay.
Government funds are the safest. They hold at least 99.5% of their assets in cash and U.S. government securities.
Okay.
Prime funds hold cash and commercial paper, which can be a little bit riskier. And treasury funds invest largely in cash and treasury bills.
Okay. All right. So let's get to the risks that are associated with money market funds, particularly in times of economic turmoil like we're in right now. I think it's so important to know what you're up against.
Yeah. Let's go back to the past. In the past, institutional prime funds have been particularly sensitive to panics and have seen large outflows during crisis. Liquidity risk can result from market volatility or from a lack of liquidity in the securities that are being held inside that money market fund.
Okay.
Reducing their liquidity risk is most important for money market funds because they are meant to be used for daily cash needs. That's the prime purpose of them, right? So, and as I mentioned earlier, another risk is that the market funds aren't insured by the FDIC, which means there is still a risk of losing money. Another risk is that while they historically maintain like $1 a share value, that's how they're based on, with interest paid in dividends, there's no guarantee that investors won't lose money. If the fund's net asset value falls below $1, it's called, it's known on the street as breaking the buck.
Okay.
While that's not common, it has happened in the past, such as in 2008 when the Reserve Primary Fund was forced to reprice its shares below $1 after a run that saw investors pull $40 billion in just 2 days because of its exposure to the commercial paper of bankrupt Lehman Brothers. Now think about what I just said there. We said 40 billion in just 2 days.
Yeah.
What happened to SVP in
SVB.
California?
Yeah.
Yeah, SVP. Yeah, SVP.
Silicon Valley Bank. Yeah.
Yeah, that one. 40 billion in a few hours.
Yeah. Yeah.
So.
Ouch. All right. So what about the devaluing of the USD? Should people be concerned about holding so much cash, with what we're seeing right now, for example, with the BRICS and other nations wanting to decouple from the petrodollar?
Yeah, possibly. If you feel the dollar could plummet from here. This has been discussed, though, for nearly 2 decades now to no avail. Could it come someday? Probably. My thoughts are, I think we would have to have greater, different issues than a run on money market funds for that to happen. So money market funds can be a good option for investors seeking higher yields on their cash, but they should carefully consider the risk and then choose a fund that aligns with their investment goals and the risk tolerance. Also, make sure to review the fees associated with money market funds, which can vary, like we said earlier, between different providers.
Okay. All right. Excellent video. Okay, so before we wrap this up, is there anything else you want to add? Like anything else that I didn't ask?
Well, no, I just wanted to go back and reiterate, this is just another video we've done to basically assist you guys during these times of uncertainty, and we hope it helps.
Okay. All right, we talk about a few times mentioned in here, there's a lot going on economically right now, a lot of uncertainty. And if you're concerned about the dollar, we've done a video on the dangers of CBDCs, which is a digital dollar that is coming very soon. So
very soon.
Very, very soon, right? Every time I think, we have a few more months, I'm like, wow, it is speeding up.
It's getting shorter. It's getting shorter. And we're going to stay on top of that as news comes out because it's going to be very important to you.
Absolutely. So we're going to put the link below the video and in the pinned comment. Go check that out. The more you know. And if you have anyone that you'd like to share that video with, I think it's that important. We all need to know what's coming for us. Exactly. All right. And on that note, like this video if you got a lot of value out of it. Don't forget to subscribe. And if you have questions, leave a comment below. All right. Thanks, Brian. And thanks to everyone who watched.
Thanks, everyone. Have a great day.